Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 23rd of August. RBNZ's Wheeler, no need for rapid easing. The Kiwi came under renewed buying pressure overnight following some remarks by RBNZ Governor Wheeler, who stated that rapid policy easing is not warranted. Rapid decreases in interest rates would likely result in an unsustainable surge in growth, and they could inflate further an already overheating housing market, according to Wheeler. The bank chief also put to bed some speculation that the benchmark interest rate will fall by another 50 basis points. He stated that the RBNZ's current forecasts imply an official cash rate that is 35 basis points lower than now. Although these comments are far from hawkish, given that expectations for further easing as early as in September surged following the latest meeting's strong easing bias, they came as a surprise to those expecting aggressive stimulus, causing them to short cover. Wheeler's remarks suggest that the bank is likely to wait for longer than previously anticipated before pulling the trigger again. Bearing in mind that the RBNZ has two policy gatherings left this year, in September and November, with the next one being February 2017, we believe that the most likely candidate for the next shot of stimulus is November. Even though the RBNZ is still in an easing cycle, we believe that New Zealand dollar could retain its shine in coming months, given that the bank still offers the highest policy rate among the G10. In a world of negative yields and heightened political risks, the combination of higher bond yields and a stable political environment in New Zealand could keep the Kiwi in demand. As for today, during the European day, we get the preliminary manufacturing and service sector PMI data for August from several European countries and the Eurozone as a whole. All but one of the indices are expected to have remained unchanged or to have declined, albeit marginally. July's PMIs showed that European businesses weathered the initial Brexit impact with surprising resilience, something also acknowledged by the ECB President Draghi at his latest press conference. In line with the forecasts, we expect most indices to remain more or less unchanged, supported by the fact that, at least so far, Brexit risks have not materialized. What's more, the ECB's prior easing measures have finally started to make their way into the real economy, which enhances this view. The reaction in Euro could thus remain limited unless we have notable surprises. The block's preliminary consumer confidence for August is also coming out. In the US, the preliminary market manufacturing PMI as well as the Richmond Fed manufacturing index, both for August, are due out, and expectations are for the indices to have ticked down. A decline in these figures is supported by a similar fall in the Empire State Manufacturing Index for the same month. The nation's new home sales for July are also coming out, and the forecast is for a decline. Even though none of these indicators is usually a major market mover by its own, a decline in all of them could prove to be a cause for some weakness in the dollar, at least temporarily. We have no speakers scheduled on today's agenda. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.